So we'll go ahead and get started. And so again, my name is Brandon Abbott with PassiveInvesting.com, one of the managing partners here at PassiveInvesting.com with Dan Handford and Danny Randazzo. My role, with Passive Investing is acquisition. So I head up our acquisitions team, which is Eric Fitzgerald and Chris Neary, and they work on deals and bring it to the table so we can offer to our investors. And my background is in construction and insurance adjusting. So my background was in single family homes, building houses before the housing crash of 2008, at which point I transitioned out of that to insurance adjusting and was in that for 8 years, and then transitioned into multifamily operating and syndication, which is where obviously I am now. I live in Columbia, South Carolina, and I have with my wife and 4 daughters and 2 dogs. And so we have a busy lifestyle, always with 4 girls. It's never a dull moment, but we love every minute of it. So one of the big things when we were starting out in multifamily with Danny and Dan and myself were, initially you start out by yourself, right? It's just us, and we're doing everything ourselves. But very quickly, as you're building, you're going to have to add, team members. And that's what we're going to be talking about today, finding partners or investors for apartment syndication. So we're going to be talking about, you have partners and you have investors and you have team. I'm going to focus a little bit more on team members, which is going to tie back into investors. It's all about building your network here. So when you start out, you're going to be all by yourself, but you're going to have to find properties, and the way to find properties is through finding brokers. And so you're going to want to get your broker list together, find out who you're going to be working with, and accountants, property managers, mortgage brokers, attorneys plural being real estate attorneys or SEC attorneys, depending on if you're doing JV or if you're doing whatever type of model you're using for purchasing. You'll need the SEC attorney there, and then insurance brokers. So that's kind of your professional team or professional partners, if you will. And we'll go back over each one of those and how to get those in a minute. And then you have your in-house team. So this comes later on as you grow. You're going to have your investor relations, acquisitions, coordinators, asset managers, marketing, and key principals. And key principles is something that may come later or may be something you have initially. With us at PassiveInvesting.com, we, as the managing partners, are the key principals and loan guarantors for all of ours. So we never did add that piece or have that piece initially, but you may or may not. But as you get started out, you want to quickly decide who you're going to need and look kind of at your final goal and what your goal is and how you're going to achieve that. And it's in multifamily, this is a very, it's a full-time deal. It's easy to start. It's not easy to start out, but at the beginning, you're going to start out while maybe working another job or a W-2 or a 1099 at another position. But very quickly, you're going to need to go full-time in this. The sooner the better. And in order to do that, you need to add partners and team members and things along those lines. And the faster you can scale, the more money you can make, the happier everybody is. So you want to very quickly add team members as you go. So let's go ahead and dive in and kind of how we're going to add partners. And then we'll go into more on the partner side as far as maybe other GP partners or investors and things along those lines. So to start out, brokers, you got to have brokers first because you need to have deal flow or pipeline. So the sooner you have pipeline, the sooner you can buy a deal. So if you don't know where deals are coming from, then you cannot buy them. A lot of people say, well, first I have to have my investors lined up, or first I need to have, my KP lined up. I think that you really need to have your deal flow first and get your broker relations down first. Because then you can kind of decide and look at what's coming through and decide how much, of a loan guarantor do you need, or how many investors do you need? So get your broker, depending on what size of property you're looking for. If you're going from a 5-unit is really where multifamily starts on up. If you're getting over 100 units, kind of, 150 on up, you're probably talking more of an institutional broker. But if you're 5 units to 100 units, you're probably talking more of a local broker. So you got to really get into the market, and it can be as simple as just typing in, brokers in whatever market you're looking in. So, just type that in, find out who it is, get a meeting set up with them, and then you're going to want to ask them, kind of some questions. And this applies more maybe to the local brokers as opposed to the institutional brokers, because the institutional brokers have that track record. They're nationwide, they're a big firm, but you can kind of talk to them, ask these same questions if you feel like it. But kind of, what's your transaction volume? How many deals do you close per year? How many successful closes have you experienced in the last year? How long have you been working as a real estate broker? Because sometimes we run across people that this is their first multifamily deal. Usually they're in commercial, but they found this one deal and they're going to try to sell it. So you may run into some snags there, as far as, how much knowledge they have in multifamily, because the two, commercial and multifamily, are two totally different animals. Or storage and multifamily, we've run into that as well. They just have a one-off storage deal, but usually they're multifamily. And so, you just want to ask that question. How many listings do you currently have? How do you find deals? How do they find deals? Are they trying to wholesale, or do they have relationships? And really that ties back in how long they've been in the market, because if you've been in the market a long time, all the sellers. It's a very small community in multifamily. I know there's thousands of multifamily properties out there, but we continuously bump into the same groups on multiple deals, same broker, same debt broker, same sellers or buyers or whatever it may be. It's a very small community. So find out how they're getting their deals. And ideally you want it from experience and not just from, wholesaling or bird dogging. Do you offer both on market and off market deals? Most groups are going to offer both, but the only way you're really going to get off market deals is through building a relationship, because if it's off market, obviously they're not going to spend a lot of time on marketing and getting out to the general public. So they want to go with groups that are tried and true and that they know can buy the deal and it fits their criteria. So if you've never transacted with this broker before, he most likely is not going to send you an off market deal. So that's something that's going to come on down the road. And what stage is the local apartment market in? You can get a lot of feedback from them and kind of find out what they think about the market, get their feedback, and you can do your own research, and you must do your own research, but also get some feedback from them. What's the cap rate? What's the per door basis on A, B, and C class? Different things like that. How do you structure your fees? On the multifamily side, most of the time there's no buyer and seller agent like there is on single family. Usually it's one broker and they're both the buyer and the seller representative. That's always been our experience, but maybe different on the smaller scale. And some of you may be able to chime in on that. But on the smaller scale, there may be a buyer seller, but typically at the level we play at, it's just one broker for both sides. And is there anything in particular that you do differently other than other real estate brokers in your market? You can ask that question. And then get some references or talk to other people that kind of find out how they like working with that group. And then just ask them for anything else, any other feedback that they feel is pertinent to what you're looking for. It's very important to get a feel for the brokers. Not all brokers are created equal. Some are team players, some are not. Some are very professional, some are not. Some are honest, some are not. So it's not, and that's at every level. We had a deal we were working on over last week. It was down to us and another group. This is a large deal in Texas, and last minute they threw us a invite for a buyer interview call. This is where they go through our questionnaire and ask us all kind of questions about we're going to get the debt and equity and everything else. And they gave us like a 4-hour turnaround time to see if we could schedule it. Or I guess it was 8 hours, but still a very short time frame. We made it happen, and then we didn't get any follow-up, and we asked them, what's going on? And, oh, sorry, we've been traveling. We haven't gotten back with you. We won't have an answer till later in the week. And then they sent a text message saying they awarded it to the other group, which is very unprofessional and, and is not appreciative of the effort that we put forward. And so, we were not going to get mad at them, but we are frustrated, and it's going to, we're going to take note of that and know that they just aren't very professional in the way they do business. So that's your brokers. Definitely build the relationship. Now, some things that are hard, and they're going to ask you different types of questions, especially if you're new to the space. Kind of where you're coming from, what's your experience level. They're going to probably ask you, like, who's your property management company, or are you going to manage it yourself? How many units do they manage, or do you currently have in your portfolio? Are they local? Have you or someone on your team purchased an apartment complex before? That's a big one. And what type of deals are you looking for? Criteria is huge. You got to have that set kind of before, because they are going to ask you what vintage, what asset class, what deal size, what market, what submarket. What markets are you looking into? How will you fund the deal? Where's your equity going to come from? How did you find them? Is a question they're probably going to ask you. Will you sign an exclusive agreement? That doesn't really happen at our level, but on the local level, sometimes they want an exclusivity agreement. And then they're going to want, some references or different things like that. And I was going to see, I had this available. I have a one page that I'll say we created, but that Melissa created for us. And we send it out to our brokers when we want to introduce them. So if it's a new broker we've never worked for before, don't have it readily available. Melissa, if you have that at access, can you put that into the Teams chat, and I'll grab it and share it there. Sorry about that. I was sharing that on the wrong screen there. So we had the one page where we kind of it just talks about our criteria and different things along those lines, what markets we're in, and has some information about our group. It's very helpful just to kind of introduce ourselves to the broker. So if I get that, I will share that as soon as I can. And then we go to accountants, or let me back up on the broker side. As far as experience, you may be asking, how do I tell them I have experience if I don't have experience? And I always say the best way to build experience is by investing in deals or becoming a co-GP on a deal. So if you can raise money for someone else as a co-GP, that gives you experience on those lines. So that would be great. Move this over here. Is everybody still seeing my Multifamily Investor Nation investors for apartment syndication screen? Yes. Okay, good. All right. Melissa just sent me that one page, so I'm going to try to open that up for you. All right, this is kind of our one page that we have, and I'm not on this because I'm the head of the team, and really Eric and Chris are the ones that are out there day to day, and so I purposely do not include myself because I want to force communication through Eric and take that off of me, and that's part of building the team. And we'll get into that a little bit in our in-house team because the name of our company is passiveinvesting.com. So we want to generate income through as little effort as possible. And so building your team out internally is the best way to do that. So I want to, I could be the guy, right, always talking to everybody, and I feel real special because, everybody knows Brandon Abbott, but it really doesn't give me scale. So I want to definitely pass it on to our team, and then we'll grow our team and as necessary along those lines. So that is our one page. Just kind of look that over, kind of see there's our markets and everything that we're in, kind of deals we're looking for. And it just is a real nice, compact way to introduce ourselves. So it's good to have something like that. Unfortunately, you probably don't have a Melissa on your team to put together something as nice as this, but if you are so fortunate, it's a great tool to have. And so then we move on. Sorry, I got a little bit distracted there. Getting experience, go ahead and invest in some deals or help raise money for some deals. And then the way you can say, oh, well, I've been involved in so many deals, and it helps you build that repertoire. Or, the key principle, deal, you can kind of tout their experience. So if you're very new and you need a loan guarantor, you can use their experience. They're going to require some payment for that, but that's a good way to have experience as well. So accountants, once you get a deal under contract, you're going to definitely need an accountant. Now, on the property level side, your property manager will likely have an accountant. If not, or if you're going to self-manage, you're going to need somebody to manage the accounting for each property, but then you're also going to need accounting for your business as a whole, and dealing with all of the taxes and tax engineering and depreciation, all of those things. So an accountant, and you're going to find all these people through your network. So if you're on social media or in this group or you're on the summit is a great way to find people, because we're going to have accountants, attorneys, and different things like that. And you can kind of see what they have to say, listen to their experience level, and find some great people that way. We have our personal SEC and real estate attorneys on Multifamily Investor Nation each time, so you can check them out as well, and accountants. Property management, you want to really look for a property management group that is in the market that you're targeting. So you may have, let's give an illustration. Like, we were in Greenville, South Carolina with our initial assets, and then we wanted to move to Raleigh, and we had a property management company that was good in Greenville. They were based in Greenville, but when we went to go move to Raleigh, that particular property management company did not have any assets in Raleigh. So it's very hard for them to give you a market analysis if they're not in their day-to-day, with rent premiums and knowing exactly what the labor costs are, because labor does not cost the same in Raleigh as it does in Greenville, nor does it cost the same in Orlando as it does Jacksonville, et cetera, et cetera. So we needed a group that was in Raleigh and knew Raleigh, and we could really lean on their expertise. And so we started looking at, and we do that with every market. So if you're looking in Texas, are they in Texas, or, they don't really know much about Texas, because they may be good at property management, but that's only one piece of the pie. Really, the property management is almost more like an in-house team. So before we put an offer on a deal, we're getting pro formas from the property management company and making sure that all the business model lines up with the property management and us before we even put an offer on it. So if they're in the market and they know the rents, you can lean a little bit on what they think the rent premiums will be, and then do your own analysis and see if they line up. And so you can be very confident in the business model or business plan going into the deal or bidding on the deal. So property management is one of the most crucial pieces of the professional team that you will ever have. So if you're going to be vertically integrated, you're going to do it yourself. That's great. I don't recommend that at the level we're at, unless you get really, really large and you have the bandwidth to hire and have somebody over that. You're going to want, somebody that does property management kind of be over that whole head, but we wouldn't do that because I'm not a property manager, nor is Danny, nor is Dan. So we haven't looked that route yet. But they are going to be your biggest ally in purchasing assets, and not all of them are created equal. I had one property management company that used to work for us, keyword, and we were looking at some deals in their base state and in their base city. And I was like, hey, we're looking at this property, and we want to know kind of what, can you put together a pro forma, like, go down through all of the T12 line items and say, okay, this is what payroll, this is what expenses, this is turnover costs, maintenance costs, contract costs, other income, et cetera, all the way down. What do you think it's going to be based on your experience in the market? And then what are your rent premiums going to be? What's your gross rental income, et cetera. And then their response was, I'm too busy to provide you with a pro forma right now because I have too much going on. And that's just such a non-growth mindset, and they are no longer working with us because of that. And it's just, but then we have one group that is just, they will bend over backwards for us. They understand we're growing. They want to grow. They just do whatever, we ask. We're friends. We are colleagues, and they're just awesome to work with. And that is great. And then we have some other companies. They are very helpful. They do a great job at management, but not so much helpful on the acquisition side. So, it's just what you're looking for. Mortgage brokers, that's going to come, as you get a deal under contract. You got to kind of know where your debt's going to come from. We use multiple debt brokers, I should say, not mortgage brokers, debt brokers. So at the level we play at, it's a lot of times the broker has a lending arm and they would like you to use that lending arm because they get some fees off of that. And where possible, we do use the broker's lending arm. So, if it's like Cushman Wakefield, they don't really have a lending arm. So we typically have our own debt broker that we've worked with from the beginning, and he does a great job, and we use them multiple times. And on the same front, that debt broker has an investment arm or a property brokerage arm, but we haven't been able to really close a deal with them on that side. So it kind of goes both ways. But then you have some groups that have a debt side and they're really pushy. They want to use their debt team, and they get kind of irritated if you don't. So you got to be careful with that. But debt brokers are very, very important. Find one that really has your growth, somebody that's hungry, right? You don't want somebody that's the big dog and they don't really care, and you're small fish and they don't respond. You need somebody that's hungry and that wants your business and is willing to grow with you. It's going to be the big difference on your success level, because they're going to fight for you because they want you to come back. But if you have the big wig that just, I don't need their business, and they don't have any experience and they have a short-term mentality. And then your attorneys, you need both a real estate attorney and an SEC attorney. Initially, we started out with just one, and he did both, but we really want the SEC attorney to be focused only on SEC, because that's the way they're have a little more experience, and only that. We want them to be specialized. In the real estate side, again, same thing. And again, you want somebody that's going to respond, and that's a great way to kind of vet them. Is if you're trying to get their business and you're reaching out and they take a day or two to respond, or like longer. I have a huge pet peeve with not responding to emails within 24 hours. I cannot stand it, especially on the professional level. At least give me got your email, give me a minute, I'll check into that and I'll get back with you. But when there's radio silence, it just drives me crazy. So it's very unprofessional. And then insurance broker. So you got your broker for the deal flow, accountant to keep track of it when you get it, and to kind of keep track of things as you're raising money, property management. When you get it purchased and you take over, mortgage broker, that's kind of out of order. You're going to need that before you close. And the same with attorneys, and then insurance broker. We work with our insurance broker to get quotes before we put an LOI in the deal, because we want to make sure that we've vetted all the numbers. Especially in different markets. So in Texas, you might have some higher insurance rates, or in Florida, if you have some hurricanes, you got to make sure that you know what your per door insurance cost is going to be in your underwriting. So that's your professional team. I'll go over that one more time. Brokers, accountant, property management, mortgage broker, attorneys, insurance broker. That's your professional team kind of outside. Now, you may be able to have that on your inside or in-house team, but that's kind of your professional team. And you can have that when you get started, and you're going to need that when you get started. But as you scale and as you become full-time in multifamily, you really want to, grow as fast as possible, because you can only be in so many places. You only have so much time in the day. So very quickly, you want to replace some things that you do with someone else on your team. And I mention this book often, but if you haven't read the book, Who Not How, be sure to read that. It's very, very important to have that mindset. And so in that book, they talk about procrastination and how procrastination is actually a good thing, because procrastination is the sign that whatever that task is, you are not the best person for that task, because you're putting it off because you don't enjoy it, or you're not good at it, or you feel you're not good at it, or whatever the case may be. You need to find somebody else for that task. So when you find yourself constantly putting things off, writing my article in our newsletter, right, Melissa? That's one of those things I just feel I'm not good at it. It always works out, but I always put it off. And, so I've been looking for someone to, kind of not ghostwrite, but I can give them some ideas and they can put something together and help work on that. Always be looking for a way to replace yourself with someone else under you. It's a great way to build. So here's your in-house team. So number one, you're going to need investor relations, because again, this is about scaling. So we're assuming that you've already purchased some properties and now you're looking to scale. you're going to need more and more investors as you get bigger and bigger. So you're going to need investor relations. You're going to have two parts to that. You're going to have both investor relations on the side of, having conversations with prospective investors, and then also handling all the documents and organization of that. And so we have both of those. And Ann and Andrew is our investor relations on the conversational side and kind of explaining deals to them. And then Ann is our coordinator on the document side, and both of them work together seamlessly and are awesome at what they do. And that allowed Dan, as he's investor relations as the managing partner, to kind of focus on what he's best at and step away from having those phone calls every day. And he still has the phone calls, but it allows us to scale. Now we can have more phone calls because there's two people, and maybe we'll add somebody down the road so we can have even more. But you get the basic idea. And then acquisitions. That is something that when we branched out into other markets, we were in the Southeast only, and then we pushed simultaneously into Florida and into Texas. And now I'm dealing with 5 times the number of deals. And so we definitely needed some help. So we added Eric and Chris to the team, and Eric is the lead on the acquisition. So he's more of the point of communication and does a lot of the front end. And then Chris and him work very, very closely. Chris does all of our analysis and underwriting and things along those lines, which was something that I was doing myself along with Danny, and it took that off our plate so we can kind of focus on growth and scale. And for both on the professional scale side and on the personal side. So it allows me, just came back from a 2-week vacation with my family. I was able to do that and didn't really have too much to do as far as work. Obviously, I'm checking emails and having phone calls and dealing with things because business still goes on, but I'm not having to be there day to day. I got to get that LOI out. I got to have that buyer interview call. I got to do this and that, and scale as fast as possible and add that team. The biggest problem with most people's limit to scale is they don't want to add people. They want to do everything themselves. They micromanage. But you cannot do that. Another book I've mentioned often is Extreme Ownership and Dichotomies of Leadership. Be sure to read those books. It talks a lot about that. Coordinators, as you get a lot of transactions, you're going to need a coordinator. So just to get this document and get these contracts together and build the Dropbox folder for the buyers, or, download it from if you're the buyer, or upload it if you're the seller, etc. Logging appointments, different things along those lines. A coordinator is going to become something you're going to need eventually. Asset managers, that differs from property managers. Asset managers, an in-house person that holds the property management company accountable to the business plan. So he's in-house. We run all of our underwriting through him before we get to LOI, and make sure that he understands the business plan and he agrees with the business plan. And then we also make sure the property manager understands and agrees with the business plan. And so when we get under contract, nobody has any excuses as to why the business plan is not being achieved, because everybody agreed to it ahead of time. So that takes away that burden of us having to be on the phone call every week or daily, or, hey, where's the budget with, the renovations at this property, or how many units have been done on this property, or, what's our inventory of cabinets, et cetera. Let's get quotes on this. The asset manager is going to handle all that. And allow you to be, again, as a managing partner, to be freed up to scale more and more and add more people to the team. So asset manager, marketing is really something you need early on to scale. That's going to be, where Melissa comes in. She does all of our newsletters and our offering memorandums to our investors, websites, web design, pretty much everything there is. She's a rock star, and we can't do it without her for sure. But you need somebody that's good at that. And again, you may be able to do it yourself, but that's not what you are best at. I'm assuming you may be the best at that, but I'm not for sure. Could I get by with it? Could I get online and figure out how to do it? Yeah, but it's not going to be the best. You want people on your in-house team that's their sole focus. That's what they do. That's what they are, who they are. They're a marketing person. They do good in that area. And then you do what you do. As the managing partner. So marketing is very, very crucial. Building your brand. That's going to help both on the acquisition side and on the investor relations side. So the more you get out there, the more people you're exposed to, the more investors you'll get. And the more brokers are going to take note of you. A lot of our broker relations is built on deals or are advertising for current investment deals, because we'll have a tour with a broker and they'll like, man, every time I get on Facebook, it's constantly, here's passiveinvestment.com and this and this. So they see us all the time because they're getting the advertising from us. So that's a great way to build relationships with the brokers as well through marketing. So, and then key principles, if you don't have that yourself and you didn't have it, it's going to be something you may need right away. Whether it's from a loan guarantor position, or maybe it's a co-GP. So maybe you have, deals and, you're ready to go, but you don't have the net worth or liquidity to get the loan. A key principal can be someone that can work alongside of you for a fee and provide what you're lacking in that area. That probably wouldn't be as much of an in-house or employee team, but it's not really on your professional side. So that's why I kind of put it in the in-house team. But that's going to be something you may need, but hopefully as you become successful in the multifamily space, you very quickly will not need that. So that's one that's declining or going away, whereas the other ones are increasing as you scale. So the key principle for net worth and liquidity. And then also as far as partners on the multifamily side, like co-GPs. What's a co-GP? A co-GP is a co-general partner. So we, Dan, Danny, and myself are the managing partners of passiveinvestment.com. Per specific deal, if we have a larger deal and we need other co-GPs to come in, we can do that. They have to fit the model of a co-GP. They cannot just raise money for your deal because that's against SEC regulations. They have to actually have some skin in the game. Go tour the property, ask questions, be on the quarterly asset management review calls and look at the financials. But they can also bring their pool of investors to the deal as long as they are truly a co-GP and they get a piece of the GP slice for doing that. So that's something like, let's say, you want to take down a bigger deal, but you don't have the net worth or liquidity, or you don't think you can raise the money for such a big deal. You can look to some co-GPs to do that. But again, it's not, you can't use capital raisers. That may change, and it's in the works to do that right now, performance-based capital raising. But currently right now, that's a broker dealer, and you have to be licensed as a broker dealer unless you're a co-GP, in which case you have earnest money in the deal, you've been to the deal, and everything I mentioned before. You have to actually be a part of that. But we take a bigger slice than the co-GPs because we work to find the deal and vet the deal and sort it through thousands of deals to find this. And we have the team to operate it and manage it. So we obviously take a bigger slice than someone that is just, maybe helping to provide some equity along those lines. So I'll take a breath right there, let everybody type in some questions. And to have, a question, how did I build my team? As far as my acquisitions team, that was something that so Chris came to us through an REI meetup, I believe, to Danny. So he was down in Charleston. He went to Danny and said he'd like to help out. He has experience in the space, very young, but wanted to get involved, understood the value. And so we kind of brought him on as a consultant, very low, just like kind of a monthly, you help us underwrite deals. And it was just very much data entry initially, but he's learned very quickly and scaled. And now he's a full-time employee with us as of this year. And then Eric came, it's all through the network, our network. So we had some contact with him a couple of years ago, actually putting together an MFIN. He's a go-getter. He just, jumped right in with both feet, reached out to Dan and was looking for ways to get involved. It didn't work out right at that time, but he went to work for a family office and kind of gained some experience and worked for another small group locally and gained some more experience there, and then came back around and knew some of the brokers that we knew, and they referred him to us as well. Again, and so it came back around and we were able to add Eric to the team this past year as well. So it's all through kind of your network in the space. So that's why it's very important to be involved in the meetups and the summits and things like that, because that's where you're going to come across people. You're going to constantly see the movers and the shakers, and you're going to get to know who's good and who's not, who's really sharp. And it's better than just like a one-off interview. Now, we obviously put positions out on Indeed and different things, and we have them take the Wonderlic test, but usually those positions are filled by people we already knew, and then they went through the interview process and we hired them that way. Is it suggested to have a buyer agent for a large apartment deal, or do you reach out to the listing broker directly? How do you find institutional brokers? Great question. Again, at the larger apartment deals, it's going to be one broker. It's always one broker. I've never had a buyer representative on that side ever. It's not even a thing. We expect that we know what we're talking about, and I think we could close a deal without a broker, but that's not the way the game is played. And so we need to build those relationships. We haven't done any principal to principal sales or acquisitions, but you definitely need to have the broker. They're a part of the structure of multifamily, and they are going to have access to more deals than you can. So the more you can involve them, the better. But you're not going to have a separate buyer broker at the level, like I said, 150 plus. I just don't see that being the case. And that's where your attorney comes in, really, and just making sure everything looks good there. That's something that's different from the single family real estate. Everyone's like, oh, I gotta have a buyer's agent and a seller's agent. But in single family, you don't also have an attorney that's checking all the contracts and making sure it's correct. So your attorney kind of is your buyer representative, if you will. And we're doing all the communication with the seller broker, and we're doing all that to make sure everything is on the up and up. But it's a very smooth process with multifamily. We don't really run into much issue. How much commission does the broker charge for under $1 million deals? That's going to change per broker, how much their commission is. Some are flat fees, some are hockey stick. So if they achieve the broker opinion value is what they're going to come out, the BOV. And so they're saying, here's low price, here's strike price, and here's best case scenario. And if they hit best case scenario, their fee is going to go way through the roof. So that's going to vary. But just ask that question to the broker. What do you charge? And now you don't really need to be concerned about that if you're buying. That's only if you're selling. If you're buying, don't worry about it. It's included in the purchase price. The seller's paying that fee, and it doesn't really affect you. So don't worry about that. Who's involved in hiring these team members in the early stage and the stage where you are at in this stage? All right. So we, as the managing partners, have manager calls, quite often, and we discuss needs. And each one of us has our own desire from the position that we're in. So I'm acquisition. So obviously, I'm not really concerned about adding an investor relations person or adding a CFO. I'm concerned about adding an analyst or an acquisitions lead. And so we have these calls, and I say, well, I think we need to have this, and I would like to add this person. And we look at, our income for passiveinvesting.com and look at what we can afford to add, and we try to add that as soon as possible. But it may be, I say we need an acquisitions lead, but Dan says we need a CFO, and then we have a discussion saying, okay, well, we think the CFO is more important at this time. It's going to help us here, here, and here. And we make that decision, and we add them. And then we have Stacy, who works on our team. She puts out an ad, I guess you will, a post about it on Indeed, and then handles all the initial interviews and the Wonderlic test, and then we get on and interview them as well, and we go from there. So we do handle the decision on who we need to add as partners. And any kind of big decision, all three of us get on the phone and we all hash it out, because it's amazing. The three of us have different mindsets, and we don't ever, like, if we're having a conversation, let's say just Danny and I are having a conversation, and we say, well, we need to have Dan, and we get Dan in, and we have the call, and we very quickly come to a decision. Well, what do you think about this? What do you think about this? Okay. Yep. Nope. All right. Here's the decision. All three of us provide a perspective that helps us come to that decision. Do you have any questionnaires for vetting lawyers, transaction lawyers, and specialty lawyers like securities lawyers? No, I do not have a questionnaire, but we have some great attorneys. get on, go sign up for the MFIN Summit. We're still going, so you still have some time to do that. Please do that. And both of our attorneys are going to be on there. Both Dugan and Norm Prate, and Dugan are going to be on there. And so, you can get their content and listen to what they have to say. So be sure to sign up for that. And you can get a lot more property management teams on there as well. So be sure to check that out, but no questionnaire. Now I think I'm kind of going to these questions backwards, so apologize about that. How do you divide that slice between you and the co-GPs? And that's going to vary based on, how much they're bringing to the table. But usually, it's like a 3% of the total GP. And then GP is going to be, we do a 70-30. So investors are 70, we're 30. And then we get a percentage to like co-GPs. And then, you just have to kind of divide that up between how many co-GPs you have. So 3% of the 30%. What's the typical waterfall structure you use? That varies per deal, but we usually do, like on our Class B shares, we do a 7 pref, and then once we achieve a certain IRR threshold, 70-30 up to that point. Once we achieve a certain IRR threshold, then it's 50-50 after that. Got that one. How do you get a guarantor on the first deal? I'm able to raise, okay, 2 million, but I need to find guarantors, so you can go for bigger deals. I mean, you could just, being involved in the network as far as finding co-GPs is the question. They have can raise some money, but not enough, and have you can put it out on social media. I know that sounds kind of weird, but being involved in like some of the meetup groups is a big way to do it. And you can just say, I'm looking for a co-GP, put it out on LinkedIn, put it on Facebook, put it on even Instagram, whatever, in the groups, and say you're looking for those co-GPs, or sorry, in this case, a loan guarantor, and say, and then they're going to tell you the terms for that. It's going to vary. To use catch-up and promo in your waterfall. We do catch-up and we do promo, yes. Catch-up, it varies, but yes, most of the time we do. So, if we're paying, let's say we estimated it was going to be a 7 cash-on-cash return, and we had a couple of years where we couldn't pay distributions because of whatever, COVID or, whatever the case may be, and you skipped distributions during 2 quarters or a year. So it would be debt is paid first, then catch up, then the division from that point on. So yeah, we do have the catch up. Great questions. How do you get a guarantor on the first deal? All right, I already got that one. Sorry about that. And I'm going to have to sort through some of these because we're getting low on time. How do you go about finding the sponsor operators in a new area of the country that you want to invest in, and where you might want to partner or co-GP? So as an investor, you just want to get, it's on social media. They talk about where they're investing in, most of them put out where they're investing in, I don't really have as many investors that are like specific, like, okay, this operator or sponsor is investing in the areas I want. It's more like, oh, I like this sponsor and I trust them, because that's going to be the most important thing, that like and trust the sponsor. And then when they bring out a deal in an area that you really like, or deal by deal, because you may have a deal in Charlotte that you really like, and they may have another deal in Charlotte that you don't like. So it's not just really what market they're in, if that makes sense. And then partner co-GP, that's going to be relationship based on the co-GP side. That's something we don't take lightly. So, we have to know these people, and know that they're on the up and up because of the bad boy carve outs, with agency debt, different things like that. So get involved in some deals, invest, and then you can talk later about, co-GP. And how to find investors. I do want to touch on that because that is on our thing. The finding investors is, you always start small with acquaintances. If you're in a professional circle that has a lot of high net worth individuals, go to them. They work with you. But you don't ever want to go at it as trying to sell them something because you need to make the sale. It's you're providing them with something of great importance that will help them in their life. I mean, you have to understand that really is, we're not trying to sell them a gimmick here. You're selling someone the best investment strategy, I believe, in the world today. I mean, look at inflation right now, where it's at. So when I buy an apartment complex for, let's just for easy numbers, $100 million, and inflation is 6%. Well, that affects the sale price of the apartment. So I didn't lose any money, but if I have money in a stock and it's just cash and I pull it out, well, yeah, you made 6%, but inflation was 6%. So you made nothing. Okay. So real estate is huge. And then you have the whole, the 1031 exchange that's still in place for now, and catch up basis and different things. You have to realize that you're providing this investor with something that is crucial to a better lifestyle for them. And it'll be easy to find investors that way. But start with your circle and then network out. You have to have your CRM and your database very high touch. Don't land blast them. Don't be, aggressive in your marketing and constantly hitting their email, because they'll just dismiss you. You want investors, but you don't have to act like you must have their money. Because there are some investors we really don't want them involved if they're too high maintenance, or they don't understand the space, or it's all the money they have and it's their last 100,000 they want to invest it. We really don't want that, because it's not good for you, investor. We could use the 100,000, but we'll come up with another place to get that from. So treating it like you're providing them with something of benefit is better than they're providing you with investment, with dollars to close on the deal. All right, we're getting down close. Do you just focus on landlord friendly states? Absolutely. I'm not investing in anywhere that has unfriendly landlord laws, like Michigan or California or what have you, New York. All right, so we're gonna have to leave it there. I apologize if I didn't get to all your questions. We had a ton of questions. You can always email me. We're very open. Another book I'm going to recommend is going to be The Infinite Game by Simon Sinek, I believe. If I didn't get that right, I apologize, but it's The Infinite Game. It really talks about the mindset behind us and how we're not in competition. I hope that anybody on this webinar today, if you're just getting started, I hope that one day, we're bumping into each other on a $500 million portfolio deal. There's plenty out there. There's not a scarcity mindset. We want to share as much knowledge as we can. So email me, ask me the questions. I'll help where I can. If I don't, I'll try to refer you to somebody that can, but we're here to help, and for no other reason than to help you, because it's benefited us in our life, and we want to pass that along to you. That's why we don't sell coaching. We don't do things like the other gurus do, because that's not what we're about. We want to share our knowledge with you. And so if I didn't get to your questions, be sure to email me, brandon@passiveinvesting.com. And be sure to check out the next, let's see if I can get here. Let me refresh the page here. The next webinar is going to be implementing technology into your real estate acquisitions process. And that's going to be with myself, Chris Neary, and Eric Fitzgerald. I'm going to try to get on there, but right now it's going to be just me. And so we're going to talk about some of the process we use to scale and really cycle through the pipeline. And we use a system called Monday. So if you want to learn more about that, be sure to register for that. And we'll go over that next week. But thank you again for joining us. And we look forward to seeing you again next week. And I hope everyone has a wonderful day.